Good morning. It's Tuesday, the 30th of April, and this is Govindraj Ethiraj broadcasting and streaming in transit, but headquartered in Mumbai, India's financial capital. Our top stories and themes for the day. Banks power the markets up 941 points in an unexpected surge. How Shanghai retail investors are sending up global gold prices. A new tax law to help medium and small enterprises is possibly doing the opposite. How Bangalore is the best place to be a landlord. And America will host a major cricket league, the T20 World Cup, this year.
This is a call report with Govindraj Ethiraj.
Banks fire up the stock market. It was a somewhat unexpectedly strong Monday at the stock markets as both the BSE Sensex and Nifty50 rose 1% each. The overall cues, including from Asian markets, were strong, but the momentum was largely strong thanks to the banks, both private and public. Both stock indices, that's the BSE and the Nifty, have meanwhile begun inching back to their lifetime highs. The BSE Sensex closed 941 points higher at 74,671, while the NSE Nifty 50 closed 223 points higher at 22,643. If you may recall, we've been having discussions about the index at 75,000 and whether to enter, and those discussions have been happening for the last 2 weeks, where the index was obviously below 75,000, so it would have been a good time to buy if you were going to. The broader markets, the Nifty mid-cap and small-cap, were however moving a little more slowly, ending with gains of between 0.2 and 0.4%. ICICI Bank rose almost 5% to hit a record high in its best session in over 2 years. On Saturday, as we've reported, ICICI Bank posted March quarter profits that were higher than analyst estimates. Axis Bank also hit a record high days after beating its fourth quarter profit estimates and has jumped about 9% in 3 sessions according to Reuters. State Bank of India rose more than 3%. IT stocks are still not having it good in case you were thinking that all stocks are going up, thanks, which is in the case of IT or information technology services, to revenue pressures continuing. HCL Tech fell almost 6% after reporting lower than expected fourth quarter revenue. Apollo Hospitals fell close to 5% after the hospital chain sold a stake in its digital unit in a deal that brokerages said undervalued the subsidiary, according to Reuters. The Bombay Stock Exchange, now this time we're talking about the stock and not the exchange, fell nearly 14% after the Securities and Exchange Board of India asked the exchange to pay regulatory fees on annual turnover based on the notional value of the options contracts it was writing. On Wall Street, the S&P 500, the Nasdaq Composite, and the Dow Jones Industrial Average were all up under 0.5%. So the big gainer was Tesla, which jumped more than 11% after clearing a key hurdle for acceptance of its full self-driving technology in China, following Elon Musk's surprise visit to Beijing on Sunday. Apple climbed more than 3% on the heels of a bullish upgrade from investment firm Bernstein. Other big tech stocks like Microsoft, Alphabet, Meta, and Nvidia were trading lower, according to CNBC. Interestingly, Domino's Pizza's shares rose nearly 7% on Monday in early trade, that's on Wall Street, after gaining about 21% this year. The pizza major managed to buck a downbeat trend for eating out in the United States with better returns on its loyalty program and fresh promotional offers, drawing what Reuters called inflation-weary consumers to its pizzas and chicken wings. Oil prices ease off again, citing a peace deal between Israel and Hamas. Oil fell in a choppy session as traders considered the possibility of a peace deal between Israel and Hamas. Bloomberg reported that U.S. Secretary of State Anthony Blinken will step up his push to secure a truce in Gaza during a visit to the region, and the White House said Israel has agreed to hear out its concerns. Crude oil prices were quoting under $89 a barrel, and the general trend in the last few weeks, as you must have seen, is that prices trend to go lower the moment the pressure point eases off. Blame Shanghai retail investors for high gold prices. A quick check on gold, which moved higher after a weekly drop. Bullion rose marginally after losing more than 2% last week. Everything hinges around possible interest rate cuts in the United States from the Federal Reserve, which at this point are only appearing a possibility. Higher rates are typically negative for gold as it does not pay any interest. But then why have gold prices been rising and hitting record highs, as you know, from all the way from the United States to India? One reason is central banks who've been buying more this year, including China. But that's not the only reason. Bloomberg says that after weeks of debate about whether a mystery buyer was stoking the rally, several prominent figures in the global gold market are concluding that the major new driving force is what it calls a legion of fleet-footed retail investors on the Shanghai Futures Exchange. In a matter of weeks, the Shanghai Futures Exchange has gone from a sedate futures venue to the nexus of the global gold market, according to Bloomberg. So while centers like London and New York have also seen activity levels rise, the fact that volumes at the Shanghai Futures Exchange have spiked from a low base is an indicator that a new bunch of Chinese investors are driving prices of gold sharply higher. Meanwhile, spot gold climbed marginally to about $2,342 an ounce on Monday. The best place to rent out a house is Bangalore. Now, rentals are rising across India, which means it's a good time to be a landlord for those who can afford to be one. Real estate consulting firm Anarok says that average rental values have soared and rental yields, the annual return on investment investors earn from capital invested in property, have been rising steadily. And the latest Anarok data says that Bangalore tops the list with a rental yield of 4.4% for the first quarter of 21-24. You may of course have seen some social media posts of youngsters complaining about rising rentals and draconian landlords in Bangalore. Apparently, Bangalore's rental yield in pre-COVID 2019 stood at 3.6% and is now at 4.4%, which is a growth of roughly 24%. Mumbai follows closely behind since rents have been rising here too, with a rental yield of 4.1% for the first quarter of 2024. We're talking about the calendar year, as against 3.5% back in 2019, which is a 19% growth. Gurgaon is close, that's next to Delhi, with a rental yield of 4.1% against 3.5% in 2019. The reason 2019 is being used as a benchmark is obviously because after that, that's during COVID, rentals crashed as many people returned to hometowns, after which landlords sought and took revenge by hiking up rentals to levels never seen before. So good news for Bangalore landlords, and obviously not good news at all for renters. Now, maybe the landlords in Bangalore can use the higher yields they're earning to do something about the water supply as well. Small enterprises in India face a chicken and egg situation. Small businesses often complain, and I can concur being part of one, that some large businesses and companies don't pay us on time and make us run around. I drew stress on the fact that it is only some companies. As a small business, delayed payments can cause havoc with cash flows and shake the foundation of the very business. So the good news is that the government heard us. The bad news is that it came up with a law that, while intending to help us, might actually do the opposite. It all centers around Clause H in Section 43B of the Income Tax Act, Finance Act 2023, which says that payments made to small businesses that are delayed beyond a specific period can be claimed as an expenditure only in the year payments are made and not in the year that liability arose. The explanation for this is coming up, but the outcome of this well-intentioned but perhaps inappropriate tool is that bigger businesses are becoming wary of working with small enterprises. It's a catch-22 that's likely to hurt the small guys more. I spoke with Ved Jain, chartered accountant and former president of the Institute of Chartered Accountants of India, and a fervent advocate against the use of income tax for what he calls social objectives, and began by asking him to describe where this new rule came from.
See, this 43B clause originally was introduced way back in 1984 to deal with certain situations where taxpayer was claiming deduction without making payment. And the issue was whether that payment or that liability will accrue or not accrue, like some tax demand in excise duty, etc. That was the original. And this is going beyond mercantile, what we call accrual basis of accounting, whereby any liability arising during the year have to be counted for, and obviously while computing income it has to be deducted. Now, over a period, the scope of this clause has been expanded after inserting various sub-clauses A, B, C, D, E, F, G, H. And the last one was this H clause, whereby last year Finance Act 2023 has made an amendment whereby saying that in case you do not make payment to small and medium enterprises within the prescribed period, of which is normal period, maximum period is 45 days, so that deduction will not be allowed to you, and it will be allowed only in the year when you make the payment. Now, apparently, this was to address the grievance of the small and medium enterprises that their payment for the supplies they make to the various entities and business houses or corporate houses, that payments are not made in time, and that's why to keep a pressure on business entities that they make the payment to small and medium enterprises, this provision was introduced. But ignoring the fact that delay in payment can be because of many reasons, and this will lead to a very serious tax implications on the person who has got supplies from the medium and small enterprises, or small and medium enterprise, or small and micro enterprises, because tax law are to be used sparingly for the purposes of achieving a social objective. And in this case, if we see that in case of any problem arising with the entity, maybe the delayed payment, maybe any problem arising or other issues arising, if the payment get delayed, the tax liability will increase. And in the process, instead of being to the benefit of the small and micro enterprises, it will be the tax revenue, the exchequer, which will get benefited because there is an additional tax liability. And from where the money will come, nobody has addressed. If I have taken a supply of, say, 1 crore rupees from a small enterprises, and perchance to whom I have supplied it, it has not made payment to me, now I will not be able to make payment to this small and medium enterprises. With the result, I will be saddled with a liability of 35 lakh rupees. And if I am required to make this 35 lakh rupees, it will ensure that the future payment, which I would have made delayed payment, will also not be made because out of 1 crore, 35 lakh has gone to the government. And that's why this provision has created a lot of hue and cry. And now this has resulted, I think, to be it has become counterproductive itself for the small and micro enterprises, because many people, business houses said that they will not deal with the small and medium enterprises because it is very uncertain that payment may be made time in time.
Are there two different issues here? Payment from MSME to large enterprise and payment from large enterprise to MSME, or is it the same thing?
No, it is a payment to small and micro enterprises. It's one issue only. And in the process, it can be from small and medium enterprise to another small and medium enterprise also, which will also get covered. Because the law says any taxpayer who is required to make payment to small and medium enterprises, if it doesn't make the payment within the time, then deduction will not be allowed. So there can be two small and medium enterprises which are dealing with it, and one has purchased from another. So it will be the small and medium enterprise which had made the purchase and does not make the payment, then it will get affected also.
I know you said that large enterprises are wary of now doing business with small enterprises. So, is this a stalemate, or how do you see this going forward?
But, no, but they are looking for alternative suppliers, vendors. See, the question is, in case I don't get a deduction, because there are uncertainty in the business. So what I do will plan the fare in a manner where these uncertainty get minimized. I may not be able to eliminate it and totally take out, but definitely I will like to make sure that these uncertainties are addressed and reduced. So now the thought process with all business houses is to avoid small and medium enterprises so that they do not run into difficulty on this provision.
Do we have any other examples of this? I mean, you use the term trying to meet a social objective by using a tax clause. Is there any other example of this within the Income Tax Act, or is this the only one?
There are many where such type of amendments have been made, but later on withdrawn. As I said, this provision was introduced way back in 1984, even for taxes like indirect taxes, sales tax at that point of time, excise duty, etc. There is a provision presently of ESIPF also. In case you don't make the payment of ESIPF in time, then that deduction will not be allowed.
So, if you were to now find a solution for this, let's say, or if you were to offer a solution, what would it be? I mean, in a way that, let's say, MSMEs feel that they are being taken care of, large businesses feel that they are not being unfairly taxed or penalized.
See, one possible way can be a middle path can be to allow the deduction in case the payment has been made before the due date of filing the return. So that will give an extended period of 6 months till 30th September, the normal due date of filing the return. Or otherwise, this type of clause is not required. It will ultimately prove to be counterproductive for small and micro enterprises.
Right. Mr. Jain, thank you so much for joining me.
Thank you.
Get set for the ICC Men's T20 World Cup in America. The ninth edition of the ICC Men's T20 World Cup, which will be a 20-team event, will take place in the United States and West Indies from the 1st to 29th June 2024, so barely a month away. There will be 55 games in all. The T20 World Cup is a landmark one for obvious reasons that we've talked about, which is its location, but also comes on the heels of the IPL, which is going on right now. So I reached out to well-known cricket and sports journalist and commentator Ayaz Memon, and I began by asking him what would be different in the ninth edition, what he would be looking out for, and also a quick word on the IPL that's going on right now.
Well, I mean, this is a big breakthrough where the sport is concerned, where cricket is concerned, not just the T20 format. Is piggybacking on the T20 format to break into the American sporting system or whatever the US holds out for cricket. It's been a long wait. It's taken almost 3 or 4 decades because this has been going around for as long as I can remember, ever since I started my career, that let's look at exploiting the US because there's so much on offer there in terms of not just the money, the financial part of it, which is significant, but also in terms of following and fandom and stuff like that. So this is a really major breakthrough for cricket as a sport.
And how are the matches going to be split up? The US as well as the West Indies are hosting it.
Yes, the bulk of the matches are in the Caribbean because they are more equipped. Traditionally, they've been cricket-playing countries, so they've got the infra. But some of the big matches, and certainly the biggest match of the tournament is going to be played in the US, which is India versus Pakistan in early June. And that's projected. Right now, it's a surmise, and I suspect that is going to come true, that it'll deliver the largest ever audience for any sporting event because there's just so many cricket lovers around in the world. India versus Pakistan is the marquee match. So, everybody's eyes are trained for that or are just waiting to watch that contest.
Right. And we'll come to the team in a second, but there will be 55 games over a month. That's, as I can see, from 1st to 29th June. So how is that in terms of pacing out and, the intensity?
I mean, there is going to be a lot of hardship in terms of travel and distances to be covered. And certainly when you look at the West Indies, let's not forget that there are so many different countries there. So while there might be visas of convenience, the Caribbean visa, which allows you to get into all countries without standing in long queues for getting visas. But even so, there are going to be hardship. Travel is going to be a bit of an issue. But I think that players have to take it in their stride and whoever else is associated with it. It's going to be very different from playing in England where most grounds are 2 hours away from each other or 3 hours, But even in countries like Australia, distances can be very, very daunting. Flying from Perth to Adelaide can take half a day. So this is going to be a novel experience for those associated with cricket traveling all over the US. It's a large enough country in itself. And then, of course, sundry Caribbean countries.
What can you tell us about the previous 8 editions? I mean, what are the key standouts in terms of teams and victories in the last 8 editions of the T20?
Well, India won the first ever inaugural T20 World Cup in 2007. Then they haven't won since then. So there's a lot of yearning, if I might put it that way, for winning this tournament amongst Indian fans and supporters. Interestingly, countries like England, the West Indies have won it twice each, and so on. I mean, largely, you'll find that most countries have won it, won the tournament somewhere or the other, except maybe some, New Zealand haven't won or South Africa haven't won, which tells you how unpredictable T20 can be. So it's not like, say, in the ODI World Cup where Australia has been, you look at the history of ODI cricket, you'll find Australia has won it so many number of times. Or in Test cricket where Australia again, and now, the last 2 decades, India has been a very strong team. So T20 that way, in a sense, it can also be a bit of a lottery, but it's just too unpredictable. It's too difficult to call who will win, at any stage.
I'm going to come to IPL in a moment as well because that's going on right now. So tell us about the team and the 15-member team for the ICC T20 from India. What is it looking like, though it's not been formally announced?
Well, the formal announcement has to come by the 1st of May. That's the deadline for all the teams. 15-member squads are allowed by the ICC. I think they were also allowing some playing reserves to go there because, as I mentioned, these are long distances, and you can't have substitutes and replacements for players flown in within a day because of the jet lag and travel hours and stuff like that. So I suspect that, each team will get to take 17 or 18 players, but the official squad is of 15 players. Now, what's happened with this IPL? This is IPL 2024 has come just before the T20 World Cup. The World Cup follows immediately after the IPL is over with a little gap for players to recover, rest and recover for the major tournament. And the IPL has seen fairly, dramatic ups and downs in terms of fortune. Like, for instance, Mumbai Indians, 5-time champions, are languishing towards the bottom of the points table. Royal Challengers Bangalore, looking for their first title, still are unlikely to get it this time too because they are right at the bottom. And then the form of players has gone up and down. So I think there'll be some unanticipated or surprise selections, in my opinion. Some big names or big ticket names might not make the cut, but not what everybody imagines. I personally think that guys like Rohit Sharma and Virat Kohli will certainly be there. But, somebody like a Shubman Gill, who's being touted as the next big thing, and he's a fabulous player, but he's just facing so much competition from others like Yashasvi Jaiswal and Abhishek Sharma and Ruturaj Gaikwad. The thing, Govind, is that India or Indian cricket is rich with talent. It's just the situation is, in terms of talent, is so robust, so healthy that Rahul Dravid and Ajit Agarkar, the chief coach and the chief selector, and Captain Rohit Sharma, who will confabulate in picking the squad, are going to have to break their heads to get the final 15 going because there seem to be 3 or 4 contenders for almost each position.
Right. And that's a very good place to be in, I guess, from one point of view. Ayaz, thank you so much for joining me. And we will, of course, come back to you in a week's time to pick up on where the IPL is, which, of course, at that point would have steamed ahead and closer to the quarterfinals and finals.
All right. Take care. Thanks, Govind.
Thank you. Well, there's a lot of cricket coming up, so pad up. And there's a lot of holidays coming as well. Actually, there are not too many. There's just one right now. On the 1st of May, that's Wednesday, on which day the stock markets are closed. So we will not have an edition. That's tomorrow morning, but we will return quite faithfully on Thursday. See you then. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.